DJ here from PTA, going over Friday's trades, which is June 17th, 2022. Want to go over these trades here on the SPY. The SPY was down per usual. Despite what they're saying and everything, we are in a bear market slash recession, or whatever way you want to put it. I just see it as that. So any pop up is just, to me, an angle for them to basically consolidate and drop it further. So we got a low of 362.17 currently right now. Markets is hitting new lows on the SPY. So I think this is going to be a continuous sentiment throughout the summer, as I've talked about in other videos. So just something to think about when you're trading and looking at certain plays, to not stay in them too long, and definitely follow the trend. So the stock that was the winner was probably REV, Revlon. Came off of a low, bounce and went up. It kind of closed at the lower part, but it did close above its open price, which is reason why I would predict that next week it would actually move on and maybe have a nice move up towards another key area. So when looking at this, when you draw your lines, you need to make sure you're hitting the key areas. So like that was a key area. This here was a key area. See how it wicked out, hit support there. This area right here is a key area. So I'll put that 475. And then this one will be 5. And this one probably be 3. I'll make it 360. So those are your key areas coming into that day. As we break it down, go down to the 5-minute. And typically when you look at this, you want to look at the overall consensus. So we had a big drop down, a break and a wash. You see that it respected that 360 area, came back and closed beneath it as well. So let's go over here down to maybe an hour. So after we had this nice slide pullback, rally into the morning, a little bit of confusion. I see this right here as support, as an area that it started to support. But right here along this 360 area, you see how it went up to there, rejected it, went back up to there, rejected it, and then it actually started trying to hold there here and ended up pulling back. And then we finally got the break on the 1 o'clock hour, 1 o'clock Eastern time. So the way I look at the trade is I'm looking at the numbers. I'm looking at what's actually going on. So this right here was your first leg up. When you're placing a trade, I kind of look at, again, the higher time frames to kind of get a consensus of what's going on. So if we take a look at this, this is from the 5-minute. We had our lower highs here, 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 and as you see, it's still downtrending. So once you get 3 of these, that's basically a 15-minute. So what I would do at that point in time is look over at the 15-minute for that same pattern. And what happens is you see that it was actually going across. So I would have drew my line as such, like this. And this is called a trend break. So my trend break line would have went just like this over the top. And then essentially I would have wait here and just see the pops. So ultimately I look for the stock to pop above the line, break and hold, and then I go into an actual trade. So let me go down to the 5-minute, take a look at it. And as you can see, even if we scooted this down a tad big or something like that, that was pretty much the move right there. So as long as it stayed heavy then that was the break. Now, this is where when you take a look at the stock and you look at market structure, paying attention to what's happening. So you got you a push down into a zone. If you take a look at this, you can really see the zone from here. So this was your demand zone. Let me see something here. We got a box. This is where the buying pressure come up at. So think of it like this. Market went open here, went down, got brought up, went back up, and pulled it down there. So this will be considered your small zone. So you can even take it from a further distance if you want to take it off of the resistance. So basically new resistance, old resistance become new support. Old demand zones become new supply zones. So this was a supply zone here. And you can see how the stock kind of traded in that area. So the reason I took that is because this was the previous resistance. It broke out and then it broke down from there. So that's another way you can look at it if you're using supply and demand zones. But ultimately, I would have drew it right here. It's my demand zone because that's where it wicked and respected. So as you can see, it pretty much respected this 340 area. So, you know, ultimately, that was your zone. So that was probably intraday support, 340. So we'll mark that purple. So that's that line there. 340 was the intraday support. So you see it wick, and then it started to pull up. Now, this is what I want you to pay attention to off of the chart when you're looking at price action. You look at it go down into that zone that we talked about earlier, and then you see it bounce back up. Now, look at that. That looks about 50, maybe a little bit more than 50%. Maybe it's at half, and then it pushed away. Now, if you pay attention to the area of the zone, you can see that it created a zone here and created a zone here. But those two zones are the same. Now, what happens is if you pay attention to the actual length of the candles, so you see you got this igniting candle on the 5 minute going into your trend zone, your trend line. What happens is that it pulls back, but just slightly a little bit higher than the previous area, just slightly. So this right here is what you're looking for. Then you see that it popped back up. But if you notice that right here, and this is where, you know, keeping a good eye on this area here is where it starts to change. As you can see, the candles are decreasing. So the pop up to entice the shorts to get in is decreasing. So as the stock goes up, it pulls and then it kind of went down, make a higher area from the previous area. It went back into that zone to test, pulled back and make another area. So as you can see, it's step 1, 2, 3, 4 steps, now 5 steps into the price or into the zone. This is the zone or the price from the higher time frame, that 360 area that we talked about before. So this area right here is where it actually broke. So now what you wanted to do is to break, retest, and then take off. So ultimately your area of interest would have been right about here. It's about where you would have got in at. So breaking that down into the 1 minute gives you much clarity. So as you can see, that ideally was your zone. So you could have risked off the 360 and risked it back here to 350 for a 10 cent. Okay, because this is your previous area. Or, you know, if you just want to do a 20 cent risk back to the supply zone, that would have been fine as well. 20 cent risk, you looking at literally $1 or so gain before. Good 84 cents. So 20 and 40, that would have been a 4 to 1. So, I mean, that's a solid trade. just off the first rip. So ideally, the whole concept is to try to find the zone. You really want to find your supply zone, and know that that supply zone becomes a demand zone. Once it becomes a demand zone, that means it's holding, and then being patient for the trade to actually fold and actually get to where it needs to be. A lot of people just don't have the patience to wait for the trade to fold. So unfortunately, that's the reason why they take the loss or whatever that they're doing. So what I always do is tell people is that, hey, pay attention to the zone, not so much what you feel. Look at the zone. When you started to see it creep up, when you started to see starting to tighten in this very specific area, this is where, you know, it benefits you. When this right here starts to get tight like that, it's either going to break down or break up. It's only options. So everyone's looking at it like that. But what triggers that is looking at the volume. When you get a ramp up in volume over the zone, any type of pullback is just an exhaustion. So my zone would have been right there. That would have been the ideal area right there to actually place your trade. So when you're looking at trades and you're looking at areas and zones, you always want to get in right there, right in the zone, risk to the back of the zone, or a risk to the demand area. So this would have been just a good trade. Me, I probably would have did a 10-cent risk, maybe 15, more likely 10 cent. Take that rip right there and then make my first move. Took some off here, let the rest ride, and then because of how it traded, it never really came back below that zone. Really, it actually bounced off that 340. So 340 being right here. So let's go back here. 340. So as you can see, it came back to that area and then stayed above it. So, and it stayed above it in pre-market, after hours, I mean. So as you can see, that 475, that's exactly about the area it came up to before it then collapsed. So that lets you know that this 475 $5 area was probably some type of supply zone at this point. And that's the key. That's the key to finding those good trades. It's just to play the lines, play the areas that you can see that the chart gives you, load up in those areas so that you can take major advantage of these trades when you see them. And the rest of it is being patient. The whole key to it all is being patient with your areas, being patient with your trade, allowing it to manifest and then transpire the way you want. So just to recap, give you a quick synopsis of what I'm talking about. Remember, this was A, okay? This right here was B, and this began the C area, and then we had a breakout to D. So a perfect ABCD pattern from start to finish, and being patient with the trade, because you got to think this didn't move to well after 1:45 p.m. Eastern Standard. So this requires you to be patient. This requires you to not jump in or think anything else. And even if you got caught jumping in early, because I know a few traders got caught here right on this break. So obviously you would have went. Let me look at the 5. When you look at the 5, this would have been the area 2. This pop here. Well, think about it. If you're going in right there, and let's say it was a 1 minute, let's go back to the 1 minute, you would have been getting into your position maybe somewhere here, right? Maybe off this candle, and you would have been risking to the zone. As you can see, it never came back to that zone. Okay, so that would have just played, and then you would have drew, another trend break as well, and then added here. So that could have been an area Then you could have added right here as well. That would have been two good areas. So, you know, you could have loaded here, let it pop, pull back, let it pop, pull back, still in the zone, added here with confidence, with your order about here going into the break, which would have been a perfect average on price with a many shares. And that's probably what a lot of, you know, traders end up doing in that area specifically, was getting into that area in that zone and playing it off the break. So it doesn't matter which way you play the break. If you play it properly, then you'll be fine. Now, the reason why I took it off the 15 is because I'm noticing the candles doing this. So I'm going to wait till it breaks. Wait for it to actually break off the 15. So I was waiting for somewhere here anyway, because I'm looking at the downward trend on the 15-minute. So if you see the trend on the 15-minute, you play it off the 15. If you see the trend off the 5-minute, you play it off the 5, 30 minutes, so on and so forth. So it's really you eyeing and being able to quickly identify which time frame you should be playing from when you're playing that trade. All right, guys, if you have any questions, comments, drop it in the comment section. We'll definitely be able to reach out to you. Join the Discord. A lot of guys are in there getting great information in our Discord. It's totally free. So definitely go to the Discord. If you have any questions, concerns, drop it in there. One of the traders, one of our junior or senior traders will reach out to you. And guys, as I tell everyone in the Discord and new traders coming on board to trading, and old for that matter, stay studying and stay focused.